Well, hi everyone, Happy New Year, and welcome to our YouTube channel. We're talking BMO, of course, with our mortgage specialist from the BMO, Assad Naeem. Sid, how are you, bud? Good?
Pretty good, pretty good. How's the new year?
Yeah, it was good actually, quietish. Today we're going to the subject, we kind of got around it a few times, but this is the government
Yep.
assisting first-time buyers, Assad.
So there are many first-time home buying programs and plans out there, like that tax credit that you can get as a first-time home buyer, or the GST HST rebate, which is available on new homes, and also the first-time home buying program that you can use with the RRSP. But we're talking specifically about the first-time home buying initiative, and this is the government's incentive or the government's way of helping you with a down payment on your first home.
Okay.
And the reason why we're focusing just on this is because this is a incentive or a topic that goes a little deeper than the rest, right? There's some eligibility criteria that people have to know. And a lot of people are not aware of it. They just know that, hey, the government can help out with a down payment, and they're not even sure of how much of a down payment the government can give. So, now, in a nutshell, the government can give you either 5% or 10% towards your first time home buying purchase. Now, the 5 or 10% really depends on what type of property that you're getting. If you're getting a new construction home, then the incentive amount will be either 5% or 10%. It's going to be one or the other, not nowhere in between and nowhere higher than 10%. If you're buying an existing home, then the incentive will only be 5%. And for those people which are looking to buy a mobile home, then that's going to be 5% only. And this is where it gets a little tricky, right? Because people don't know, hey, if I'm buying this type of home, how much will the government give me? Can the government give me 7%? Nope, it's either 5%, or if it's a new construction, it's going to be 10%, right? Um, but it's going to be one or the other. Now, it doesn't mean that you're going to get that type of down payment and you're going to give a 20% down payment total. Your down payment with your own sources plus with what the government is going to give you cannot be 20% or higher, meaning the maximum it could be is 19.99999%, meaning that the loan to value that the bank is going to give or any lender is going to give is going to be 80% or higher. Now, the reason for that is because your mortgage still has to be default insured. And when I mean default insured, that means that it is still subject to mortgage loan insurance premium, meaning it has to go through either Canada Guarantee, CMHC, or SAGEN, and it has to qualify in that way. That's the only reason that the government is helping out, because if you do default, at least there's an insurance company that's backing that out, and they can get their money's worth as well. Now, what this incentive basically is a second mortgage on your primary mortgage that you're applying for, because remember, this incentive does have to be paid back either after the amortization period is paid out, or you're selling your home, or if you voluntarily want to pay it off yourself. But we'll take a look at the repayment structure in a second, but let's take a look at the criteria and eligibility of how you can actually qualify for this, right? So your total qualifying income shouldn't exceed more than $120,000. But if you're living in the Toronto Vancouver area, then it shouldn't exceed $150,000. So that should be the cap on the total annual qualifying income for all the mortgage applicants together. And the total price of the home, or the total purchasing value of the home, shouldn't exceed 4 times your qualifying income. So let's say the maximum that you have is 120,000. The total mortgage amount should not exceed 480,000. So that'll be the maximum mortgage that you'll be able to get. Or if you are living in the GTA or Vancouver area, that's going to be 4.5 times your purchasing power over there. So 4.5 times 150,000, you do the math and you get the figure from there. And your mortgage should not be greater than that figure. So a lot of people think, hey, I'm going to buy a $600,000 home. I have $150,000 in income, and you're not living in the GTA. Chances are you're not going to qualify for this program. If you are living in the Greater Toronto area or Greater Vancouver area, then you may be able to qualify for this program. Second eligibility is you have to be a first-time home buyer, either you or your partner or whoever's going to be on that mortgage with you. This is available for all Canadian citizens, permanent residents, or non-permanent residents who are authorized to work in Canada. And the minimum down payment requirement has to be from your own sources, whether it's savings, from your RRSP, or a gift from an immediate family member. And when it comes down to repaying this, just know that there is going to be an appraisal that will be done upon your repayment time, just so the government knows what the fair market value of your home is. And you're going to pay back the percentage of the home that you got in terms of the down payment, and you're going to pay that back whatever the fair market value is at that time. And more or less, that's exactly what the first-time home buying incentive is. And that's a deeper look into it, especially in the eligibility side. So a lot of people should now have some sort of idea of what it takes to actually qualify for this incentive.
Okay, and they can contact you, of course, because your information is coming up, and no doubt, as always, you will walk them through it, or we will walk them through it, because maybe I can look for the properties for them. Well, have a good week, then. I'll talk to you next week.
Yeah, definitely.
Thanks, bud. See you, Assad. Thank you for watching our video. We hope you enjoyed it. Please subscribe to be notified of new ones.